Hi everyone, welcome back to InvesFinc. Is the market setting up for a big move on Tuesday, June 10th? Well, we are giving you the inside track on the key levels for Nifty, Sensex, Banknifty and FINNIFTY that could drive tomorrow's action. But there's more. Stick with us to the very end of our exclusive deep dive where we are decoding Monday's most explosive stocks and what their moves could mean for you tomorrow. So watch until the end. Before we jump onto the details, please go through the disclaimer. Now let's begin with the analysis on the indices. First up being Nifty. So on Nifty today we saw a gap up opening and this opened at the highest level of around 25,160 and the same level was the high for the day. And post that we saw a kind of consolidation in entire today's session. Hardly there was a move of 90 points in overall Nifty. So ultimately from the yesterday's close, Nifty closed around 100 points up, translating to 0.40%. So overall, despite there was a kind of gap up opening, there was no much movement that had been seen. So now the expectation should be that market should open positive in tomorrow's trade and sustain those levels and continue to move on the higher side. If that happens, only then we would be seeing the levels of around 25,300 odd. Else if tomorrow the market opens flat and then we see selling pressure coming in, and in case if we close or start trading below the low of around 25,077 levels, which is just 25 points away from the closing, then we would be seeing a kind of fall that is expected to come in, and we would hover or maybe trade in this particular range of around 24,800 odd levels from where we had seen the jump. So overall for Nifty the trade is expected to be in the 200 points range, either 25,100 or above it should start trading, or else if it starts trading below 25,077,000 odd levels, then we should take sell call kind of positions and then wait for the Nifty to trade until 24,900 800 odd levels, which would act as a support. So on the long side, only about 25,100 if it crosses, then we can take the trades for 25,300 odd levels. Now let's see from the perspective of open interest. So open interest also there doesn't seem to be lot of action. So we could see at the money kind of strikes, significant open interest positions got added both on the call writings as well as on the put writings. Rest other strikes, maybe 100 point strikes, slight additions have happened. So somewhere if maybe tomorrow's trading session is going to remain calm, then we might see 24,750 odd levels and then around 25,300 odd levels. This would be the overall range where the Nifty would trade for this week, so which is a kind of 600 point range. But yes, if tomorrow there would be a lot of positivity, assume, and then the market closes above 25,200 odd, then we might see Nifty to move ahead towards 25,500 odd levels also. So let's see how the market is expected to trade in tomorrow's trading session. On the PCR front, it is positive 0.9 overall, and at the money also is 0.86, which is still bullish. Now moving on to Sensex. Even Sensex opened gap up and then the gap up sustained, but yes, even on Sensex we did not see a significant kind of movement. So overall the markets traded in 300 point range for Sensex, opened high around 82,574 levels. So these were the levels from where we actually had seen the sharp sell off that came in, and then market or Sensex in fact gave the highs of around 82,669 odd levels, and then after a kind of consolidation trade today, so there was just a move of around 256 odd points, roughly around 0.31 odd % in today's trade. So for tomorrow, once we start closing beyond 82,550 odd levels, only then the positive trades or long trades should be initiated. Else, if have a wait and watch approach, and once we cross below the lows of today, around 82,369 odd levels, then be prepared for Sensex to again come back trading in the range of 81,800 odd levels. So this would be the range that we can expect, 81,800 on the lower side, and then once we start trading above 82,550 odd levels, only then the long should be initiated, which could lead towards 83,000 as the first resistance, and beyond that around 84,000 as the second resistance. From the perspective of open interest, so again, at the money strike, that is 82,500 odd, is where we have seen significant action, both on the call side as well as on the put side. So overall, on Sensex, the immediate support or the highest support that we could see is around 81,000 odd levels, and then on the longs, if we see 84,000 holds the highest open interest positions. So the range is quite big, around 3,000 odd points. But yes, considering the fact that tomorrow is the Sensex weekly expiry, we may not see strong moves that are expected to come in. So at max 83,000 is what we could approach on the longs, or then if we start trading below 82,300 odd levels, at max we can approach towards 81,800 odd levels, not below that, at least for tomorrow's weekly expiry. So 81,800 should be the strict stop loss for us, and on longs maximum 83,000 it might reach. So it is okay to take positions or call sell kind of positions on options only beyond 83,200 odd levels. So this would be the trade that we can expect in tomorrow's trading session. So PCR is positive at 1 overall, and 0.93 at the money, which is again bullish. On the Banknifty side, again Banknifty also had given a similar move where it opened gap up at 57,050 odd levels, and then this remained as a high. Gradually we saw Banknifty slipped, and then there was a kind of 250 odd points slip. However, ultimately we closed at 56,839 odd levels, which is positive as far as overall Banknifty is closing. So we jumped around to 61 odd points from the previous day's close, which is 0.46% higher compared to yesterday. So overall, Banknifty has been trying to approach those 57,000 odd levels on closing basis. So once we do that, then we could open up for the next leg of a move towards 57,500 in the near term. And for us, the strict stop loss or support should be around 56,000 odd levels, which is like the 50% retracement of the previous day's candle. So 56,000 on the lows or the support, and on higher side we could definitely not predict. So 57,500 should be our first resistance, and beyond that maximum 58,200 to 300 odd levels. So we would know more from the perspective of open interest positions as to where we can see the maximum open positions from the call raters. So as we have told that on the long side there is definitely no cues, but the immediate resistance is at 57,000 some positions. However, we see also strong built up on the put writing. So as long as we sustain or stay towards 57,000 odd levels, then we would see put writing would get initiated, and that would act as a strong support. Now gradually we see until 58,000 some open interest positions on the put writing is getting initiated. So for us to move beyond 57,500 and all, first the closing has to come strongly towards these levels of 57,000 odd. For support, we could immediately see 56,000 as the strong support, and then next to that we have some light support even at 56,500 odd levels. But we could also see the call writing is heavy, or almost 80% of the overall put writing. So this surely cannot be considered as a strong support. So yes, 56,000 levels would be the immediate support for us, and beyond this, as long as we continue to move higher, we will have to carry on or move our positions, and then stay strong from the put writing. So overall PCR is at 1, which is positive, and at the money is also 0.93, which is bullish. So banking stocks have got a major boost from the Reserve Bank of India, and that would be the sector which would continue Nifty to take on the higher highs. Now moving on to FINNIFTY, which is the last index that we are going to discuss today. So even in all the major indices, we saw similar kind of move that came in. There was a gap up open, and then that gap up sustained, and ultimately we have closed on the higher side. So even on FINNIFTY, we have just closed tad below 27,000 odd levels, which is a round figure. But yes, there was a positive momentum of around 0.454%, roughly around 444 odd points on FINNIFTY. Compared to all the other major indices, FINNIFTY remained quite positive with 0.54% jump. Now, as long as we close or stay beyond 27,000 odd levels, we could immediately see new highs coming in around 27,300 primarily, and then beyond that we will approach towards 27,500 to 600 odd levels in this monthly expiry of FINNIFTY itself. For us, the support should be around 26,600 odd levels, where FINNIFTY had touched or held for a lot of days. So 26,600 should act as a strong support, and then on the higher side we could approach until 27,500 odd levels. Now let's see from the perspective of open interest. So at the money, open interest stays strong both on the call writing as well as on the put writing, though we have seen significant build up today on the put writing, but yes, there have not been lot of additions on the call writing, but there is no unwinding too, despite we have approached towards 27,000 odd levels on FINNIFTY. So somewhere even we see at 27,500 odd as well as 28,000 levels, we see additions slightly here have happened, but unwinding could be seen here. So as you could see, there is slight unwinding until 27,700 odd levels. So as long as we keep approaching higher levels, we will see the put writers getting emerged at the low levels, and that would act as a strong support. And then there are high possibilities or expectations that we could approach or move towards 27,800 also on the higher side. So PCR seems to be quite positive overall of 1.9. Not sure from what positions this is coming in. Could be majorly these kind of additions what we had seen today. Yeah, and at the money it is 0.75, which is not that bullish. Now comes the interesting segment of the market participants, how they have taken the trades. FIIs continue to add short positions, and in fact today they have carried to the tune of 95,800 odd contracts on index futures as shorts. On index options, largely on call options, they have went long with 1.22 lakh contracts, and on put options they have hedged by going long with 1.28 lakh contracts. So net on index options, FIIs have been mildly holding short positions, which is quite insignificant. Proprietary traders, on the other hand, continue to hold or add additional shorts on index futures to the tune of 13,125 odd contracts. However, they have smartly been hedging and went long on call options with 1.09 lakh contracts, and have taken short positions in the put options with 36,900 odd contracts. So net on index options, proprietary traders have massively been carrying their long positions with 1.46 lakh contracts. Retail traders or clients, on the other hand, massively continue to hold longs on the index futures with 66,571 odd contracts. And on index options, on call options, they have massively shorted the positions to the tune of 2.31 lakh contracts, and on put options again they have shorted to hedge with 1.03 lakh contracts. So net, again, retailers have been continuing with their short positions, though some short positions have been unwinded. However, yes, they continue to further carry their short positions for the tomorrow's trade. Let's see now on the cash investments. So on the cash market, DIIs continue to pump in money with 3,500 crores in cash markets. Similarly, on stocks, FIIs have also pumped in roughly around 1,993 crores in the cash market. So both FIIs as well as DIIs continue to go long, or are positive on the cash markets. So as long as the major institutions continue to hold long positions, there is no significant sharp drop that can be expected. But yes, keep a strict stop loss at the major levels, or supports what we have discussed. Now comes the trending stocks or the buzzing stocks of Monday's trade, and what is expected in the tomorrow's trading session on these stocks. Let's decode. So on the longs, IIFL stock had stood out substantially as a outperformer in today's trading session. So there was a jump of around 8% odd in today's trading session, roughly 36 points jump on Monday's trade. So this significant rally was majorly fueled by a powerful combination of favorable regulatory changes from the RBI's end, which increased the loan to value LTV ratio for small ticket gold loans, which were up to 2.5 lakhs. It increased from 75%, which was earlier, to 85% now. So this is a major positive for IIFL Finance, as it allows the company to offer larger loans to the retail traders or consumers for the same amount of gold collateral, which directly boosts its business potential, as well as it is an attractive offering to the customers of IIFL. So this positive regulatory news sparked a widespread rally across the entire NBFC space and financial services stocks too, and IIFL jumped the highest level of around 8% in today's trade. So because there is a positive news, and this positive news could also translate in terms of its earnings potential in the coming quarter. So we can expect the stock to further continue this uptrend. So somewhere, if you see from last two trading sessions, the stock has almost jumped kind of 16 to 18 odd percent. And then we might further see the positivity to continue until 550 odd levels. So as long as we approach towards those levels, then we will have to stay and remain cautious, because we would come on the other parallel line of the trend. So if we see a positivity expected to continue from these levels too, at the higher side around 550 odd levels, only then we can go long and stay strong. Else, if there are possibilities that we might see reversal at the higher levels coming in, and then we would further touch to these levels of around 480 odd. So until 550 odd levels, which is around 10 odd percent from here, or 12 odd percent from here, could be the safe bet that we can take on IIFL stock for the up move. Now next is Kalyan Jewellers. In fact, on Kalyan Jewellers, we saw a drop of around 2.03% to the tune of 11.45 rupees, and it closed at 550 odd levels, which is close to the round level what we had seen. Though there was no significant or major negative corporate announcement from the company, however, the stock had seen a kind of positive momentum from almost 3 to 3.5 months now, and then since there was a kind of consolidation phase that we had seen in the stock from 580 odd levels to 550 odd levels. Ultimately, it seems that on the lower side we would start breaking this particular channel, and then we could take support around 525 odd levels in the near term. So the other reason for this dip could also be that there have been cut down in the gold prices, which would have directly impact on the Kalyan Jewellers stock. So today's major dips what we had seen seems to be investors taking off some money out of the table for the gains what they have made overall in this particular rally. So if tomorrow we start trading below the lows of 550 what it had made today, then we would see the stock approaching near the levels of 525 as the immediate support, and then if we start falling below those levels, then we would approach 500 to 490 odd levels in the coming days on Kalyan Jewellers. So we have to remain cautious and keep a strict stop loss at around 545 odd levels. So that's it on the buzzing stocks from our end. So if today's analysis brought you value, don't forget to hit the like button and share it with your fellow traders. For daily pre-market report updates, make sure to subscribe to our channel and tap the bell icon so that you never miss an episode. Thanks again for watching our video, and we will see you in the next video in tomorrow. Till then, happy trading. Thank you.